Hi, this is Jack from Alpha Charts with a state of the market video. Today is January 8th, 2022. Before I get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you like these videos, please like and subscribe down below. I really do appreciate it. It really does help me out with this channel and helps me keep making more videos. So thank you very much. All right, so let's start with SPX. And it's funny, you look at the SPX and it doesn't look terrible on the chart, right? You're down just 3%, but that's not the way that the week really went. And actually, let's get the 5-day off of there. Put the 50-day on there. All right, so moving averages, 9-day EMA, 23-day EMA, 50-day SMA. All right, and as you can see, price is right sitting on top of the 50-day SMA. It's below this area, which was prior resistance. So things are looking, obviously a little bit hairy. This is a very important spot right there. Nothing crazy yet, but I think whether we bounce or continue lower, I think that retesting this area would make a lot of sense. Market doesn't do what I wanted to do, but that's another 3% lower. It's very possible, right? SPX, let's do RSP, equal weight. Now this was a big day right there, right? Down 1.5% in the S&P. Maybe a false breakout if this continues lower, right? But top to bottom here, or top to close, we'll do it 2%, right? So we're 2% from the all-time high in the RSP. Again, nothing crazy, but that's not the real story, right? The real story was in the growth sector, and the Qs will talk, we'll show that much better. We'll go to a line chart just so we can see this. And so whether you put the line chart here, this trend line here, I guess I could put it here, and then it hasn't really kind of broken yet, right? It's right at the trend line. So I think that's one important piece of information right there. Underneath all the moving averages, all of them now curling down, right? The 50-day we'll call maybe flat at best, but we're extended from them. And I think this is important. So we're right on the support area, trend line support, and extended from the moving averages. And the equal weight Qs, even more, right? QQQE, even more extended from all the moving averages. There's your 50-day up here. This has been under the 50-day since November. Now, being right on support on the Qs, my expectations and being extended from the moving averages is that next week, early in the week, we get some type of bounce here. And it could be a very strong one into the moving averages, making another lower high. Maybe, to 83.5, who knows, 84, whatever. You make a lower high, and then we're going to test this area one more time. And if this breaks, well, then you have the head and shoulder tops that will play out. Right now, it's still just a potential head and shoulders top. It's, until it breaks this neckline, it's not confirmed. So just be aware of that. It needs to confirm. But on equal weight Qs, potential head and shoulders top, expect a bounce early in the week because we're extended from the moving averages. We just moved 6% in a fairly quick time period, almost straight down. So again, I'd be cautious to get too long into with a quick bounce on Monday, Tuesday, Wednesday, something like that. Okay, just be careful there. Let's look at IWM. Again, still in a range. We can't say it broke yet. It's still a very clear range. You have 207, 208, 207.75, something like that breaks. That's a problem. Price has been vacillating between above and below the moving averages. Well, now it's squarely below it. False breakout right there. If it breaks below this area, things get very nasty very quickly, and it becomes a much bigger correction, right? And this right here is a possibility, 172-ish area. There is a gap right here, right? Not all gaps get filled, but this would be a potential, if we break down from here, again, this is a weekly chart now, that would be a major top, and I wouldn't be shocked if this gap gets filled. Let's see what that is as far as from this point. 23% down to supportish area, 20, 23, somewhere around there. That's a pretty big correction. So just be aware of that and what may happen again if it breaks this area. I mean, there's very little volume here. I think you can move into this anywhere from 165 to 172-ish area very quickly. Let's look at mid caps. I haven't looked at them in a while. Mid caps holding up better than most, right? But still not, great chart being under the 50-day and under the moving averages. I think it'll, follow the way of IWM if it does go, but looking better than the most. All right, let's move to XLF. Leading the market, making all-time highs. Well, that's good, right? Love to see XLF leading the market. It shows you where the strength is in the market right now. So again, it's probably an interest rate issue. Not probably, it is. Interest rates are going up, and we'll go over those in a second. But love to see XLF leading, and hate to see SMH with this look lagging underneath the 50-day now. Moving averages are crossing on the shortest time frame. If the 50-day starts to turn over, then that's going to be a major problem. And let's just see where we are here, 43 bars. So by the end of this week, depending on price action, the 50-day will be flattening to potentially declining. Not a good look for SMH right now. Looks toppy, obviously. Again, once it breaks, there's not much volume in here, which means there's a good chance it's going to hit this 275 level pretty quickly. 275 is 7%. So yeah, I think 7% is a good chance, and more of a major support in more volume, shelf, and everything else a little bit lower, about 13% or so. But SMH is an indicator, not looking so hot, and probably the most important subsector out there. Lumber's trying to go higher, so that's a positive. I love that it's moving higher. It's kind of flagging here. So whatever correction we get, hoping with lumber going higher that this is a quick move, lower if that's the case, and then we could rebound fairly quickly too. Let's look at TMX. So here are the bonds, right? Bond yields, 1.772, breaking out of this area. But again, they're extended. I would expect bond yields to come in some, who knows where, but come in some, and then continue higher. Now, that plays into the idea of an early week, maybe strong bounce in growth names and so on and so forth. So if you're stuck in a growth name, it may be the point where you say, okay, here's my chance to get out. Just throwing that out there, that's a possibility. If you're stuck in a growth name and, and you get a sharp rally in it, you may have to, create an exit plan. But yeah, this looks like it's extended. Interest rates will probably pull in. And then, and again, that should be good for all the growth names. Look at bond yields. Let's go line chart, get rid of moving averages. And all right, I mean, so there's not like systemic like uh-ohs going on in this market right now, right? I mean, if there was, then I think we would see something more like this. So there's no freak out. Is that good? Is that bad? I don't know. Because the market's not looking so hot and the bond market is saying nothing to worry about. So either they don't have the message yet or there's really nothing to worry about. That's good, I guess, right? It's going to be a positive. Bond market is not freaking out yet. Let's look at VIX. VIX not freaking out yet, right? Things are happening in the market. Things aren't going good, but VIX is like, whatever. 18.75, we're good. The VIXN, a little more elevated than the VIX, but still not freak out mode. And there's a lot of bad stuff happening, especially in the NASDAQ, which the VIXN is the volatility index for. So again, no freak out yet. Put call ratio, equity only, middle of the road, no freak out yet. If we got to 1, that's the start of the freak out, right? But we're not even close to 1. We're 0.74. No one's freaking out. Are they not taking it seriously, or do they know something, or are they not worried about it? I don't know. 50% stocks above the 50-day moving average, 41.91. It's just not good breath, but we've been here all for a long time, since it's been declining for a long time here. As expected, breath is weak. Let's look at value line geometric. Looks a lot like the IWM. Again, a breakdown below 629, 630. That gets really ugly really fast. So just be aware of that on the value line. Not there yet, but watch for that. Gold. So the freakouts are happening. You think gold would be ripping. Not seeing that. So weekly. Again, is this some right side of some sort of big gigantic base going back to 2011? Maybe, but again, gold isn't freaking out. The gold bugs aren't, buying hand over fist right now. So, that's interesting, right? But Bitcoin, and I go in here, it's Bitcoin. Let's just do this. There we go. There's Bitcoin, right? Bitcoin people are freaking out. Let's look at this. I mean, so I'm now in the camp of Bitcoin's just one giant growth stock, right? And last night it hit this 40,571 area. And you got a little inside bar forming right now. And what it is here will be interesting. If Bitcoin rolls over, I think the market rolls over with it. If Bitcoin bounces here, and we start to get some kind of bottom forming, I think that definitely bodes well for the market and risk on assets. But right now, Bitcoin is at its support also. We can expect a bounce here, right? When you look at some of these moving averages, they're price is way extended from them. I would expect a bounce, something like this could be a strong bounce, and then potentially the rollover. Okay, so just be careful if you're in Bitcoin, but Bitcoin is an indicator. We're watching that again, looking at everything, putting it all together. I'm expecting a bounce early into next week because everything is so extended. The interesting part that I kind of wasn't expecting today was that, the intramarket indicators that I look at aren't freaking out yet, where usually they would be. So either we're not to the point of freak out because, we are on support in a lot of places. And so people are like, okay, things are okay. We've seen this, we've seen the show before. We've seen the movie before. We get down to area support and we bounce. We get down to an area support and we bounce. And so maybe that's what they're thinking, where, if the rollover happens, that's when you start seeing all the spikes and all the intermarket indicators. But as of right now, they're not freaking out. But again, if we do get a bounce, it may be an opportunity to sell if you're holding any longs and you get a nice sharp bounce in them. Good luck. Try to get out of them. That's your choice. But again, things are looking pretty hairy, especially if you're a growth stock person. Now, if you're into staples and banks and gas and oil names and grocery stores, things aren't looking terrible, which is why you're seeing some of that, where the Qs are looking terrible and the RSP isn't looking terrible, right? Because you have more of those names in the RSP, in the equal weight SPX. So just understand that part too, is that the rotation into those value names are helping prop up some of the market, which will probably mute the indexes from showing the carnage underneath that, the growth names and the the more high flyers and names that have been great over the last few years are really hitting. Anyway, that's what I got for you today. Be careful if you're in the growth names. You may want to consider oil names and banks and grocery stores and boring names like that. I'm going to be doing my stocks to watch tomorrow. I will highlight a whole bunch of those tomorrow and show what's working in the market and set up a game plan for that. So don't miss that. I hope you guys like this. Again, like and subscribe. Thank you for all your support. Have a great week.